Hello, I'm David Harper, and I need to tell you something your bank is not going to volunteer. 3 new banking rules just took effect in Canada, and all 3 of them put real money or real access to your own money back in your hands, but only if you know they exist. The first rule caps a fee that has quietly drained money from millions of Canadians for years. The second rule guarantees something specific for seniors that most branches will never bring up unless you ask for it by name. The third rule changes how fast you can actually use money you've already deposited, which matters more than people realize when a pension check or a gift from a grandchild is sitting in your account but technically still locked. I've watched the comments on my last banking video, and so many of you said the same thing. Nobody told me. That's exactly the problem with all 3 of these rules. They are real, they are already in effect, and your bank is under no obligation to call you up and explain them. So today I'm laying out all 3 rules in plain English, what they actually mean for your account, and the exact words to use so your bank applies them to you starting today, not someday. Before we get into it, subscribe to this channel because banking rules like these get buried in fine print and press releases that almost nobody reads. If you're subscribed, you hear about it from me in plain language the week it matters. If you're not, you might not hear about it until you've already paid the fee a dozen more times or waited days for money that should have been available immediately. Hit subscribe, tap the bell, and let's get into exactly what changed. I'm covering all 3 of these together because they work as a set. The first rule protects every single Canadian with a bank account, regardless of age or income, from being hit with an unfair overdraft fee. The second rule is specifically for seniors, and it guarantees a checking account that costs nothing at all if you're receiving the guaranteed income supplement. The third rule speeds up how quickly money from a deposited check actually becomes usable, which matters a great deal if pension top-ups, gift checks, or insurance payments are a regular part of your banking life. Put all 3 together, and you've got one rule that stops the bank from overcharging you, one rule that can eliminate your monthly account fee completely, and one rule that gets your own money into your hands faster. Most seniors I talk to have never heard of any of the 3. Let's start with the fee almost everyone has paid at some point without even realizing how high it actually was. It's called a non-sufficient funds fee, or NSF fee, and it happens when a payment comes out of your account and there isn't enough money to cover it. For years, banks could charge whatever they wanted for this, and many charged as much as $50 every single time it happened. As of March of this year, that is no longer allowed. The federal government capped NSF fees at $10. Not 50, 10. That's an 80% reduction on a fee that used to quietly take a real bite out of a fixed income. And it gets better, because the new rules don't stop at the dollar amount. Your bank also cannot charge you that fee more than once within a 2-business-day window for the same missed payment. In the old system, one bounced payment could trigger the fee multiple times if the bank tried to process it again and it failed again. Now that loophole is closed. And there's one more protection worth knowing. If your account goes into overdraft by less than $10, the bank is not allowed to charge an NSF fee at all. Think about that for a second. If a small pre-authorized payment puts you $9 into the negative, you used to get hit with a $50 penalty for being $9 short. That can no longer happen. Here's why this particular change matters so much if you're living on OAS, GIS, or a fixed pension. Your bills and your deposits don't always land on the same day. Maybe your hydro bill comes out on the 28th, but your pension doesn't land until the 29th. In the old system, that one-day gap could cost you $50 in penalty fees, sometimes more than once if multiple payments tried to go through on the same tight week. On a fixed income, that's not a rounding error. That's a meaningful chunk of your monthly budget gone, simply because of timing you didn't fully control. With the new $10 cap and the other protections built in, that same timing mismatch now costs you a fraction of what it used to, and in some cases, nothing at all. And this is worth saying plainly, because it's easy to feel like these timing mismatches are your own fault, a sign you're not managing your money carefully enough. They're not. Fixed pension dates and fixed bill dates are set by 2 completely different systems that were never designed to talk to each other, and for years the bank profited every time those 2 systems landed a day apart. The new cap doesn't fix the timing mismatch itself, but it makes sure you're no longer punished disproportionately for something that was never really within your control to begin with. Let me make this real with a made-up example. Let's call her Carol. Carol is 73, and her pension deposit lands on the same day every month, but 2 of her pre-authorized bills come out a day earlier. For years, that one-day gap meant Carol occasionally got hit with an NSF fee, sometimes 2 in the same week if both payments failed. Over a typical year, those fees added up to well over $100, money Carol never budgeted for, because she didn't even realize the timing mismatch was happening until the fee already hit her account. Under the new rules, that exact same timing mismatch now costs Carol at most $10 per incident, and the 2-business-day rule means she can't be charged twice for the same missed payment, even if it tries to process again. Carol didn't change her bills. She didn't change her bank. The rule changed underneath her, and her account is simply less punishing now than it was a year ago. Now let's talk about the second rule. And this one is specifically about you if you're a senior receiving the Guaranteed Income Supplement. As of December of last year, 14 of the major federally regulated banks in Canada are required to offer a checking account that costs absolutely nothing per month if you receive GIS, not a discount, not a rebate after the fact, $0 every month, guaranteed. This isn't a marketing promotion that could disappear next year. It's part of a formal commitment these banks made to the federal government, and it applies to every one of Canada's largest banks, the ones most seniors are already banking with. On top of the $0 fee, these accounts also come with more included transactions than before, up to 50% more debit transactions than the older low-cost accounts offered. So what do you actually get with this account? You get no monthly fee, guaranteed, as long as you're receiving GIS. You get a meaningful number of free debit transactions every month, enough for the vast majority of seniors doing normal day-to-day banking, groceries, bill payments, the occasional ATM withdrawal. You get standard everyday banking features, the same basic services as any checking account, just without the monthly cost eating into your fixed income. And here's something many people don't realize. This isn't limited to one bank you have to switch to. It applies across all 14 of the participating institutions, which includes the major banks most Canadians already use. You very likely don't need to change banks at all. You just need your existing bank to move you onto the right account. It's also worth knowing that this isn't a temporary promotional rate that expires after a year and quietly reverts to a paid plan. It's a standing commitment, which means as long as you remain eligible for GIS, the $0 fee structure is meant to stay in place for as long as you hold the account, not just for an introductory period designed to lure you in before the fee creeps back. Here's the part that should sound familiar if you've watched my other videos. None of this happens on its own. Your bank is not going to call you and say, "Congratulations, you now qualify for a free account. Let's switch you over." You have to know this exists, and you have to ask for it specifically by name. Branch staff deal with dozens of account types, and unless you say the right words, you might get offered a discount on a paid account instead of the actual $0 account you're entitled to. The wording matters. You're not asking for a senior discount. You're asking for the low-cost or no-cost account commitment specifically for GIS recipients. Let me give you one more example. Picture a man, call him Walter, 78 years old, receiving GIS on top of his OAS. Walter had been paying $12 a month for a basic checking account for years, never thinking twice about it, because that's just what banking costs, or so he assumed. $12 a month doesn't sound like much in isolation, but over a year, that's $144. Gone, for an account that Walter was entitled to get completely free the entire time. When Walter finally walked into his branch and asked specifically about the no-cost account for GIS recipients, the switch took about 15 minutes. No new bank, no new debit card number in most cases, just a different account type attached to the same relationship he already had. $144 a year, back in Walter's pocket, for one short conversation he didn't know he needed to have. Now let's cover the third change, the one fewer people talk about, but that quietly affects a lot of seniors. When you deposit a check, banks have traditionally been allowed to hold a portion of it back for several business days before you can actually use it, even though the check shows up in your balance right away. Under the new rules, the amount that becomes immediately available to you has gone up significantly, from $100 to $250. That means if you deposit a check for, say, $400, you now have access to $250 of it right away instead of just $100, with only the remaining balance subject to the usual hold period. On top of that, regulators are working on shortening the hold periods themselves across the board, so this is a rule that's expected to keep improving rather than staying frozen where it is today. If you're someone who still receives occasional checks, a pension top-up, a refund, a gift from a family member, an insurance payment, this is the rule that decides how long that money sits frozen in your account while you can see it but can't spend it. For seniors managing tight monthly budgets, a few extra days of access can be the difference between covering a bill on time and scrambling to cover it late. This rule doesn't require you to ask for anything. It applies automatically, but it's worth knowing it exists so you're not surprised when a deposited check behaves differently than it used to. It's a quiet rule, the kind that never makes headlines, but for someone living paycheck to paycheck or pension to pension, the gap between seeing a balance on a screen and actually being able to spend it has always mattered more than banks tend to admit. Let me give you a quick third example. Picture a woman, call her Ruth, 81 years old, who still receives a small check every few months from a family trust. In the past, when Ruth deposited one of these checks, she'd see the full amount on her balance screen. But if she tried to actually use more than $100 of it within the first few days, her debit card would get declined, and she'd have no idea why, since the money clearly showed as being in her account. It used to confuse and frustrate her every single time. Under the new rule, Ruth now has access to $250 of that same deposit immediately, more than double what she could touch before, with the rest released shortly after under the standard hold. It's a small, quiet change, but for someone managing a tight week, an extra $150 of immediate access can matter a great deal. So here's what these three rules look like stacked together. If you're a senior on GIS who switches to the $0 account, you've already eliminated your monthly fee entirely, which on a typical account could be saving you anywhere from $10 to $17 a month, well over $100 a year. On top of that, if you ever have a tight week where a bill and a deposit don't quite line up, the NSF cap means the worst-case scenario has dropped from $50 down to $10, with extra protection against being charged twice for the same incident. And on top of both of those, any checks you deposit are now more usable sooner without you having to do anything at all. Together, that's not a small adjustment. For a lot of seniors, that's $200 to $300 a year in fees alone that used to quietly disappear, plus faster access to money that was always technically yours but used to sit locked up for days at a time. I want to be fair here because this isn't really about the banks being malicious. These are large institutions with thousands of account types, and frontline staff aren't always trained to lead with the option that makes the bank the least money. It's not usually dishonesty, it's just that nobody on their end is incentivized to volunteer the cheapest option first. That's exactly why these rules exist as government requirements rather than optional goodwill gestures, and it's exactly why you have to be the one who brings it up. Think about it from the bank's perspective for a moment. A senior who's been quietly paying $12 a month for years without ever asking about the alternative represents steady, predictable revenue. There's no policy forcing anyone to interrupt that and offer you the free option instead. The new rules exist precisely because relying on banks to volunteer the cheapest option for their customers wasn't working, and regulators decided certain protections needed to be guaranteed rather than left to individual branch cultures. So here's exactly what to do, in order. Step 1. Call your bank or walk into your branch and ask this exact question. I received the Guaranteed Income Supplement. Can you switch me to the no-cost account under the federal low-cost account commitment? Use those words specifically because generic questions about senior discounts can get you routed to the wrong account. Step 2. If you're not sure whether your bank is one of the 14 participating institutions, ask directly, Am I eligible for the federal no-cost account? And if your bank says no, ask why, because this commitment covers Canada's major banks. Step 3. While you're already on the phone or at the branch, ask a second question. Has my account ever been charged an NSF fee higher than $10 since March of this year? If it has, ask them to review it, because that overcharge should not have happened under the new rules. Step 4. Write down the date you made the switch and keep your next 2 statements, just so you can confirm the new fee structure actually applied to your account and not just to your conversation. Step 5. If you have a spouse or a sibling who's also on GIS, tell them about this specific call, because this account is per person, not per household, and they're entitled to the exact same thing on their own account. Step 6. The next time you deposit a check, take note of how much of it becomes available to you right away. If it's less than $250 from a check that size, ask your branch to confirm the hold period being applied, because that's the new minimum you're entitled to under the updated rules. I'm not on GIS, only OAS. Does the $0 account apply to me? Not the GIS specific account? No, but most major banks still offer some form of senior discount starting at age 60 or 65 on their regular accounts, so it's still worth asking what's available to you by age alone, separate from this specific rule. Does the NSF fee cap apply to everyone or just seniors? It applies to everyone, every age, every income level, because it's a general consumer protection rule, not a senior-specific one. If you've ever paid an NSF fee, this protects you going forward regardless of your age. I already have a senior discount on my account. Should I still ask about the $0 one? Yes, absolutely, because a discount is not the same as guaranteed zero. If you're receiving GIS, you may be paying something when you're entitled to pay nothing, and the only way to know is to ask the specific question. What if my bank says they don't offer this? Push back politely and ask to speak with a supervisor, because all 14 participating institutions are required to offer this, and frontline staff sometimes simply aren't aware of the exact program name, especially at busier branches where staff turnover is higher than average. Will switching accounts affect my direct deposits for OAS or GIS? In most cases, no. Your account number typically stays the same when you switch account types at the same bank, but always confirm this specifically with your branch before assuming it, just to be safe. I'm worried about the hassle of switching banks. Do I have to switch banks? No, in almost every case, you stay exactly where you are. This is a different account type at your existing bank, not a move to a new institution, which is exactly why it usually takes one short conversation rather than a full transfer. Does the faster check access rule apply to all checks or only certain kinds? It applies broadly to standard deposited checks at federally regulated banks, though very large checks or checks from unfamiliar sources may still be reviewed more carefully. So the $250 minimum is the general rule, not an absolute guarantee in every unusual situation. I bank with a credit union, not one of the big banks. Do any of these rules apply to me? The NSF fee cap and the check hold improvements are broad federal consumer protection measures that apply across most regulated financial institutions. But the specific $0 GIS account commitment applies to the 14 participating federally regulated banks. So it's worth calling your credit union directly and asking which of these 3 rules apply to your specific account. What if I was charged an NSF fee before these rules took effect? Unfortunately, these protections apply going forward from when they came into force, not retroactively to fees charged before that date, but it's still worth asking your bank whether any fees charged close to the transition date were processed under the old or new rules, since timing matters. A quick note, this is general information to help you understand what's changed, not financial advice specific to your situation. Always confirm the exact details directly with your own bank before making any changes to your account. If this helped you understand 3 rules that could be saving you money right now, subscribe so you catch the next change before it quietly costs you instead of saves you. And do one more thing for me. Think of the person in your life who still complains about bank fees every single month without realizing the rules just changed underneath them, and send them this video today. They've probably been paying more than they had to for longer than they realize, and a single short phone call is genuinely all it takes to fix it. Take care of yourself, and I'll see you in the next one.